Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify, Apple, or Google, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. This content is brought to you by Uphold, which makes crypto investing easy. I've been a user of Uphold since 2017. They're one of my go-to exchanges. They have 10 plus million users, 250 plus cryptocurrencies, and they're available in 150 countries. If you'd like to learn more about Uphold, please visit the links in the description. All right, my friends, we got to start off with some Jim Cramer news and, of course, inverse Cramer. So over the weekend, Jim Cramer was tweeting out about different retailers, and one in particular he highlighted was Warby Parker, which is the sunglasses retailer. And he said, sell, sell, sell. Can you believe this? This guy's doing this on Twitter. He does the same thing on TV. And I replied to him with a screenshot of Warby Parker's stock price over the past few years. And I said, congratulations, Warby Parker, your stock is about to moon after years of being down from the all-time highs. And at the time that I screenshotted this, the price was at $10.53. And then I put in a buy order on Robinhood on Saturday. So, of course, that order was executed earlier this morning. And guess what, guys? I'm up. The stock price is at $11.35. I'm up 6.67%. Inverse Cramer does not fail, my friends. So I'll see how far this goes. Obviously, I was looking at the chart. So I said, this is a great opportunity because one, inverse Cramer, but two, summer season's coming up. So Warby Parker is going to get more business. So this is the game that Jim Cramer plays, and he fools retail. You know, some folks say that he is exit liquidity for the big time investors. He works hand in hand with Wall Street. The takeaway here, my friends, what I want you to get out of this is do your own research. Be financially educated. Don't listen to Jim Cramer and these TV pundits. If they say something that's makes sense, go validate it. Go look at the charts. Go look at the macroeconomic factors, the fundamentals, and come to your logical conclusions, right? Don't just take this guy's word for it. And he fools a lot of people. It's pretty insane that he's on TV. And if you recall, just about a month ago, he was saying First Republic Bank was new focus, very good bank. And we know what happened after that. They collapsed. And in fact, they're out of business. JPMorgan has acquired them. So this is a larger theme, which we've been talking about for months now since these bank collapses started. And that is these major banks are going to become even more powerful and banking is becoming centralized in the United States. In my opinion, I think this is the setup for the distribution of CBDCs. I think it's going to be easier for CBDCs to be distributed to people. They're going to have it go through the bigger banks, not the small regional ones. And this is what we're seeing, folks. So don't be surprised if you see more bank collapses and Bank of America, Citi, and all these folks start buying them up. And of course, JPMorgan, they're probably licking their chops here to go scoop this up. So First Republic Bank is done. And Cramer's kiss of death about a month ago was to seal the deal here. And here, this graphic that I tweeted out includes his statements, not just for First Republic Bank, but in 2008, Bear Stearns. So the man said, Bear Stearns is fine. Do not take your money out. And of course, we know how that story ends. So I said, Jimbo strikes again. And this is just two examples out of like maybe 1,000 of what this guy has done out there. Now, the other aspect to this First Republic Bank closure is that it contradicts the anti-crypto narrative. This is an article covered here that covered this topic from Blockworks. So regulators have questioned crypto's role in the banking crisis failures, but with First Republic, the bank seems to have fallen without the help of digital assets. And we've been seeing this because multiple agencies and folks are coming out and saying, yeah, this is nonsense. But we know Elizabeth Warren and corrupt regulator Gary Gensler have been trying to say, crypto caused the collapse of the banks. But in fact, Elizabeth Warren is the one that was sending letters and working with short sellers to start the bank runs. And then we had a domino effect, but it had nothing to do specifically with crypto. They targeted Silvergate and so forth. And we, that's obviously months old news now. We're seeing new banks having issues, but it had to do with the Fed raising rates at a rapid pace, which hit these banks really hard. And obviously they were holding US treasuries and bonds, and those weren't performing well. So they were in a very bad spot. So once again, these big banks like JPMorgan are going to come in and scoop this up and become even more powerful. And then once again, the narrative that crypto is the cause of this is completely asinine. It is lies being spewed by the likes of scumbag regulator Gary Gensler and corrupt Elizabeth Warren. Now let's move ahead, guys. This is not news I want to cover, but I need to talk about it because it's popping off right now, and that is Pepe coin. Many of you may have heard about it. It's the new meme coin. In fact, it became the third largest meme coin. It outperformed Doge and Shiba Inu. Now, if you've been a subscriber to this podcast, you know I don't care about meme coins. I avoid it at all costs. I've said many times it is very, very risky. This is the riskiest. If you want to put it on a chart, as far as levels, this is the riskiest of all crypto investments. It is very dangerous. Be careful. When I say dangerous, I don't mean like to your health or something, but rather to your wealth. So be careful. Don't lose your money. Don't buy into pumps. And I'm staying away from this, but I'm letting you guys know what's happening. And it's a meme coin. It has no utility. It's just sheer speculation and crowdsourcing. It's goes back to the Reddit, GameStop crowd and so forth. That's what's happening here. I'm not telling you what to do, as far as don't go invest in it and so forth. There are people who have made money off of meme coins, but I'm telling you the percentage of people who have lost money vastly outweighs the amount that have made money on meme coins. So please be careful, guys. And here, even Blockchain Backer, who does some great crypto analysis, he tweeted out the Pepe meme coin chart, where he shows with the Fibonacci model on top of the chart, it is about to dump big time. He said all day today has been meme coin mania with people YOLOing into Pepe. Twitter has been very meme coin centric. It's amazing to see the technical behavior indicating the top is already in crash retraced to the 702 reaccumulation, then the 4.236 extension. So he's absolutely right here if you look at it on the charts. So be careful, folks. Don't go crazy and put a whole bunch of money into this. It's about to roll over. This is, once again, why you need to understand the charts and what's happening here. Be very careful. Once again, I'm not touching this with a 10-foot pole. I have no room in my portfolio for meme coins. I'm looking for utility and real-world usage and adoption. That is what I'm looking for. Now, let's talk about crypto regulations. So Representative Patrick McHenry, one of the congressmen and the chairman of the House Financial Services Committee, who grilled Gary Gensler about a week and a half ago about is Ethereum if it's a security or not, right? He said that, or he announced his hearings to address market structure around crypto. So Representative Patrick McHenry suggested the hearings will look to add to the regulatory efforts being done on the bipartisan bill led by Senators Cynthia Lummis and Kristen Gillibrand. If you recall, Senators Cynthia Lummis and Gillibrand, their bill was decent. It wasn't perfect, but remember, Cynthia Lummis is a Republican and Kristen Gillibrand is a Democrat. And both sides of the aisle working together here, and it was a decent bill, guys. So Patrick McHenry is looking to build off of that, which is really great. So the move was revealed in a joint announcement on April 27th. So this was last week from McHenry and Representative Glenn Thompson, chairman of the House Agricultural Committee, Representative French Hill, chairman of the Digital Assets, Financial Technology and Inclusion Subcommittee, and Dusty Johnson, a chairman of the Commodity Markets, Digital Assets and Rural Development Subcommittee. Here's a quote: "Our committees are embarking on an unprecedented joint effort to pass and sign into clear or law-clear rules of the road for the digital asset ecosystem. We must strike the appropriate balance to protect consumers without stifling responsible innovation," the joint statement reads. Speaking as part of a panel alongside crypto-friendly Senator Cynthia Lummis during the Consensus 2023 event on April 28th, McHenry added more context to the upcoming hearings. He said, "We're going to hold joint hearings when we return in May. This is going to be the first time we have had a holistic view for a House committee hearing around the regulation, our market structure around digital assets, and a holistic view of it. What we plan to do over the next 2 months is report a bill out that deals with the capital raising piece of digital assets, all the way through to how a product can go from a securities regime to commodities regime, and also at the same time preserve our rights around products that are neither neatly put into a securities regime or commodities regimes," he added. Guys, this is great. I love hearing about stuff like this and seeing the movements and the collaboration. McHenry also stressed that the hearings aim to establish a bill providing regulatory clarity to the crypto sector, which adds to the work on a bipartisan bill led by Lummis and Senator Kristen Gillibrand. So, folks, this is very great news. It's positive because we saw Patrick McHenry and those folks who are part of the House Financial Services Committee, Tom Emmer, Warren Davidson, and so forth, went after Gensler, right? They grilled the hell out of him. He was really uncomfortable and he got exposed. So now, the narrative is starting to shift. They made Gensler look like the fool he is, right? They broke down his narratives. So now they can go maybe win over some of their colleagues and push through this bill on top of what Lummis and Gillibrand did. Once again, a Democrat and a Republican. So I love this. This is really great news. Will this get passed this year? I don't think so. My gut says no. It will be awesome if it did. I'm thinking more next year. But the caveat here is that if we see Ripple and Grayscale both come out with big wins and you have Coinbase suing the SEC now, it might put pressure on Congress to move because the SEC is looking very bad right now from an optics standpoint. And if they take some big L's, it's not going to look good, right? So they may try to get ahead of this to help, reduce the impact of those losses to the SEC. So we'll see where it goes, but my gut says next year. But this is a move in the right direction. I like what I'm seeing here and what I'm hearing. Hopefully they can get things moving, and this makes it from the House to the Senate and so on and so forth. So let's be optimistic, fingers crossed, and let's see what's happening. Now, Congressman Warren Davidson and here Mike Flood out of Nebraska today sent a letter to the President of the United States and the White House Council of Economic Advisors, calling them out for what they call inconsistencies and flip-flopping on their handling of digital assets and how they should be regulated. Here's an excerpt from that. "Congress plays a critical role in the regulatory framework for digital assets, which are not up to the discretion of unelected bureaucrats," hello Gary Gensler, "who retain inconsistent viewpoints." So this is from Warren Davidson. Here's what Mike Flood had to say. "We need a regulatory framework that attracts investments here in America and encourages private sector entrepreneurs to deliver digital asset technology here at home. I strongly urge the Council of Economic Advisors to avoid antagonizing innovation and to adopt a new approach that supports investment in our digital future." So great to see they're going in the offensive, sending letters, calling people out. This is what we need to see. We got to go in the fight, and I'm glad these gentlemen are doing this. And we on the other side, there are bills being prepped to be pushed through. Now, we got some news here that Google Cloud is going to help accelerate Polygon's growth via a new agreement. The tech giant will be a strategic cloud partner or provider for Polygon protocols. Folks, I'm very bullish on Polygon. I hold Matic. I continue to accumulate it. That's not financial advice. Do your own research, but real world partnerships, right? There are a lot of big brands building on Polygon, Starbucks, Nike, the list goes on. And here Google is going to help develop this protocol. So Google Cloud is working with Polygon Labs to help developers make it easier to build, launch, and grow their Web3 products and decentralized applications on the Ethereum-based Layer 2 blockchain. Under the new partnership, Google Cloud will bring its blockchain node engine, the tech giant's fully managed node hosting service, to the Polygon ecosystem, which will help developers focus on building the protocol while retaining complete control over the nodes or where nodes are deployed, the company said in a statement issued during Consensus 2023 in Austin, Texas. Great news, guys. And once again, I am very, very bullish on this project as a layer 2 scaling solution for Ethereum, and they are getting massive partnerships. Now, Jack Dorsey's Block looks to disrupt Bitcoin mining. Block plans to create custom silicon for Bitcoin mining hardware to bring decentralization to the industry. Now, we all know Jack Dorsey is a big-time Bitcoin bull. He's looking to do a lot of building and expansion of the Bitcoin ecosystem. So with only a few companies dominating the supply of Bitcoin mining ASICs, Block is looking to level the playing field and bring some much needed decentralization to the industry. Plus, the company revealed it scored a deal with Intel for a stash of Bitcoin mining ASICs, giving it a major boost to accelerate its mining system development and focus on creating the next generation 3 nanometer ASICs, which are only accessible to a few companies worldwide. Really big news, guys. Jack Dorsey's behind it. You got to respect it. And of course, they're getting partnerships with some big players and looking to provide better technology, more efficient technology for mining Bitcoin. There are some folks who, don't like Bitcoin. That's okay, but the reality of the situation, you don't have to like Bitcoin. You don't have to hold Bitcoin. There are many different coins in the market. So obviously make your own decisions, your conclusions, but I'm just going to share the facts. And the facts are here that companies are investing and building with Bitcoin. Bitcoin is the biggest brand in the crypto market, has been since the inception of the market. That could change over as time progresses, but nothing has changed since. Bitcoin continues to get adoption in many different ways. Now, speaking of Bitcoin mining, Bhutan has mined Bitcoin since it was worth $5,000. The country is aiming to generate positive, sustainable returns across a range of asset classes, including crypto, by tapping into an extensive network of hydroelectricity. Folks, a country is mining Bitcoin. El Salvador has made Bitcoin legal tender, and they're, of course, going to be mining Bitcoin. They're going to launch bonds. They're going to mine Bitcoin with volcanic energy, and there are other countries that are mining as well. So once again, Bitcoin is here to stay, and there's even more proof that this is happening. So the investment arm of Bhutan has been mining Bitcoin for a few years to diversify the landlocked nation's portfolio. Druk Holding and Investments CEO Ujwal Deep Dahal told local media outlet The Bhutanese that mining Bitcoin is part of a long-term investment strategy. Very bullish, guys. And we know they're doing other things with like Ripple and trying to build stable coins and CBDCs. So these countries and different governments are going to dabble in crypto in many different ways. Bitcoin is just one avenue. They're going to look to leverage blockchains throughout their economy and how their money and functions of society, or how society functions by using blockchain. Now, peer-to-peer NFT lending is the way to go, Blur says in protocol launch. Institutional NFT traders are diving into Blur's new crypto lending protocol dubbed Blend. The NFT marketplace, which has grown into a digital collectibles market-marking force, on Monday in a white paper introduced a new protocol that facilitates peer-to-peer NFT lending. The move was quickly dubbed a significant development by crypto industry participants, especially considering growing momentum around a number of ambitious NFT projects taking shape in so far in 2023. Folks, I don't care if you own an NFT or not. You will eventually be using NFTs with your airline tickets, your movie tickets, and in different things that need to show ownership. And the technology will be running in different apps and different Web3 apps. You will be using it. And those who want to, dabble in collectibles and, continue the analog, collectible economy, we'll do that in the NFT phase, because NFTs are going to be tied to real estate, artwork, cars, different things. And people are going to lend and borrow against them. People will sell them and exchange them And of course, NFTs from certain brands and companies will unlock special perks and benefits. So this is really, really great to see. And I'm bullish on NFTs, guys, because remember, these NFTs are minted on blockchains. It provides and gives more utility to these blockchains. And if you're holding the tokens of said blockchains, those tokens are going to benefit in value growth because of the building and adoption on the network. Now, the digital currency group and Gemini drama continues. So DCG risks defaulting on $630 million in debt obligations, Gemini says. Genesis has initiated a 30-day mediation process with DCG UCC creditor committee and Gemini to reach a final solution as soon as possible. Hopefully they can get this thing resolved, man. This is one of those things that happened last year. It was just bad, right? You add this to the list with FTX, Celsius, Terra Luna, and so forth. So the mediation is focused on DCG's economic contribution to the bankruptcy's estate for the benefits of all creditors, including EARN users, the exchange's former lending program that halted operations in November. EARN was eventually forced to close following DCG's subsidiary Genesis Global Capital's alleged failure to return more than $900 million in assets owned. The proposed mediation provides for 2 meetings before May 8th, an important date as DCG owes the Genesis bankruptcy estate $630 million on May 9th through to May 11th. So once again, hopefully they can get this fixed and Gemini EARN users can get their money back because this is a bad situation. Now, finally, I want to end it here on a note about Coreum. Many of you may recall I went to the Coreum mainnet launch event in LA back in March, I believe it was, or was it in February? Boy, time is flying. Well, they're doing a great initiative here where they have some developer grants, and you can register for a hackathon. First place is $75,000 in core tokens. Second place is $25,000 in core tokens. And they have some important dates here, like tomorrow is the first workshop, May 8th is the second workshop, and May 11th is the third workshop. So if you're a developer, if you're looking to do some cool things and build with Coreum and their blockchain, you can definitely check it out. Coreum, if you want to know what it is a 3rd generation layer 1 blockchain. And they just got listed on Poloniex, it looks like. So you can check that token out. Anyway, guys, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button, share this video, and I'll talk to you all later.